Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for December 22nd, 2022. We'll start with the sniper trade of the day on a 3-minute chart. Here was yesterday's close. Gap down to here. Sold off to the low of the 3-minute bar here. Moved up, closed. The second bar moved down through the low of the opening range 3. I got a good fill. Standard risk box. By the time it moved one bar in my favor, I was ready to lock in no lose plus dinner for 2. That's the important psychological moment in the trade. This is an important moment. So you had the first test, the first leg down to here, so we're automatically going to draw that line across and call any entry below that a collapsing dragon. It was important to notice that the RL10 did not get through the dragon, and even price didn't get through the PSAR. Second entry. You know, there's 1 unit of risk, 2 units of reward. That makes this one a 2R battle drill to add a second position automatically. 2 more bars into that move, and your stop should be, somewhere in here, so that you lock in gains on the second one as well as on the first one. Okay, so we're free and clear on this trade. Now it's truly just a science project. The R10 crosses the baby dragon. It's had about 5 bars. It has not failed yet. You can see that the PSAR is going to probably look like this all the way down. So there's probably about this much time. Come on now. Yeah. There's about this much time. Yep. My screen's locking up on me here a little bit. So we're getting ready to watch this move a little lower. Oh, damn it. All right, I think we're back. All right, so we're noticing that the PSAR is continuing down. The R10 has bottomed out. So in this window right here, it's got about 5 or 10 minutes to decide what it is we want to do, or what it wants to do, I suppose. So our stop should be something like right here. And it gives us an orderly exit. After another leg down. I wouldn't be opposed to, after when you see that spike and then watch it come up here into the dragon, I wouldn't be opposed to taking that exit right there. It ends up being the same exit you get later with the PSAR, but I kind of like the idea of respecting that move and then saying, you know what, it's done. Done is done. And it would have saved a retracement of that much. So in retrospect, I kind of like that one, especially with two trades on that are full, that got a full load on them. So that's about 6R. 1 unit of risk, 1, 2, which is where the second position, 1, 2. So you get 4 on the first one and 2 on the second one for a total of about 6. I go for the Kata 2 continuation because why not? You just had 6R this way. You had a brief moment when it broached and then immediately dove back below the dragon, took out the PSAR. So I'm back on board here with the standard risk box there. Check or hold. Once again, a strong move in your favor. Your stop somewhere around on this bar here, on that move down, which was a significant break of that little consolidation. On this move down, you should get your stop to about here. And just build that little wedge of no lose plus dinner for 2. And now once again we're noticing critical state here where the R10 is reversing. Now I'm not opposed if you put your stops in here, like you want to capture more of that leg. You'd have been all right if you did. The R10 cannot get through the dragon again. It's even, the price is even further from the PSAR, and once again you got a 2R battle drill. And by the time you get this move, your stop should be probably like right there, so that you lock in this gain on your second position and your first position is deep in the money. Check or hold. Standard exit. My previous comments apply again, where when you have that really favorable move that breaks and then starts racing up, like when you see that exaggerated sell-off, you might just say, you know what, I'm going to take that here and just take a 1-2, or take it at the edge of the dragon or the spine of the dragon. Either one of those three is good. You end up getting the PSAR exit anyhow. And you get 1, 1, 2, and the second one really is a scratch. And it just feels like we gave back too much on that second position based on the size of that retracement. Now, that showed me that there was some buying pressure on this thing, so I'm ready to investigate. Now, I like this already. I'm stalking a low and a higher low, so now I can think about a penetration of that black line would be an emerging dragon. So somewhere in this space, there's an opportunity to get like a kata 2, using that as the stop. Which we end up getting. So, kata 2. 1, 2, kata 2. Same risk box. Grinding and then nothing. So you gave it the PSAR as a timing, and it broke through the dragon, so just take the scratch. I feel like I missed the short here. I feel like I wanted to be short here. And with that much of a move in my favor, I should be able to minimize the loss or get to no lose on that one. With best play, you know, a short here has to get this exit, which is about another scratch. And now we have another kata 2, it feels like. Standard risk box. Nothing. No follow through. A little fraction. And that was after 3 o'clock, so nothing else for the day. So that's, let's see here. Fit to screen. Clear. So that's Tesla for the day. The least surprising move of all. It does not get any more orderly than that. It's the most important symbol in the world right now, and it's getting smoked. And it's a Godzilla enraged, and it went south in a bare normal market. This is the least surprising move of the day. Let's see. Let's look at our... Here's the S&P on 30 minutes. Yeah, today's move down in the S&P was just basically flat down with a tiny little hook at the end. It came down and created a new 30-day low. It broke through yesterday's low pretty easily. That was another signal to be down. The recovery was just normalizing price. That's not a positive sign there. It's just the normal hook at the end of the day as the intraday leveraged shorts get covered. Yeah, on the daily, this really stands out. You get that little bit of a gap down from here to here, and it just sells off, closing poorly. And now we're testing this critical state right here. I mean, the next two moves, 365 and 355, are certainly within play. Quite a change from where it was just 10 days ago at 410. Market in collapse. Once again, the PSAR flip is your friend. The kata 2 is your friend. The 30-day range box is your friend. All right, let's see how the sectors performed today. The S&P was down 1.4. You had the Qs were the worst at minus 2.5. The other indexes were a little better. The Russell 1.3, the Dow 1%, emerging markets 0.89, and treasuries basically flat. Individual sectors that underperformed, you have tech was off 2.5, discretionary 2.6, oil exploration 3.15. This cluster of ARC Innovation 3.4, lithium, clean energy, the FANGs 4%, Aussie dollar 4.25, Tesla almost 9% down at 125. Holy smokes. Individual companies, well, there's our semiconductors in blue. And we said yesterday they were in a negative condition and they got smashed today. Texas Instruments 2.4, Intel 3.2, Nvidia 7%. Devon Energy 2.67. Of our metals, 2 out of the 3 were below the S&P. And that was, where's it? X and Alcoa, yeah. So Alcoa was off 2.25. U.S. Steel off 2.5 in the metals. Only Cliff did well today, and they were off the chart good. A real, a lot of buying pressure on Cliff today. Holy mackerel! I know some of the guys in the room got it. Yeah, just for retrospective here. You know, Cliff was up almost 12%. Alcoa was up 2.3, or down 2.3, I should say. That's a 14% sector difference. All right, so the S&P was down 1.4. You have ARC Genomics and blended commodities 1.1. Materials and wood 1%. The big cluster here, finance 0.88, the other lumber 0.85, wheat and precious 0.6, Ethereum 0.6, oil 0.5, residential real estate 0.4, Mexico a quarter, staples a quarter, Bitcoin 0.2, commercial real estate 0.16. Here's the difference between the demarcation between winners and losers. Agriculture a quarter, bio 0.3, Brazil 0.7, VIX 5.4, and Cliff. So the big red arrow in bearish normal markets, the least surprising move of the day was today. All right, let's see. This is Wojcik with Boeing. All right, his first one is a OR3. Come on. It's not letting me draw. Fine. First trade is an OR3. Doesn't take the second continuation, span of control in a meeting. Brings home 3.3. CRM, he takes the OR3, doesn't take the collapsing dragon continuation, which would have paid off, but he had some span of control. He did crush the other ones today. Tesla for 3.7, for 2, and then U.S. Steel for 0.3. Constantine plays the PSAR flip from a weekly high, picks it up with 4, and in the DAX, 5.6 with a like a and just hold. There we go. On gold and the dollar, he takes the continuation trade here, rejecting the dragon for 3.7. Satya with a nice work here on Cliff. He plays the OR3 for a quick breakout, which fails for a half. He waits for the OR3 or the PSAR flip, plays it short for cash, re-enters second position out at the PSAR flip, and then a couple more scratches for 4.4 in Cliff. Kyun plays a couple nice intradays here for 0.5. Can't read that one. Oh, that's also Cliff. A couple early ones that were on the shorter time frame that were -1s, but he pulls out for a positive day by staying with it. This is Kin on U.S. Steel. Gets the collapsing dragon break here. There was a potential second position, but he was just looking for excellence in execution. There's another second or third position there. Cash is where he's supposed to. 5.3 on the first position. In Apple at 1.5, he was focusing mostly on the metals, and he used these little short bites to get back in the game and pay for Cliff's early losses. So good psychological state management. Dan, you uploaded thumbnail, so it's a little hard to read this. He did bring home 0.2 out of Cliffs. He paper traded the rest of the day, which would have been 12. And gets 0.5 out of. Can't read that. I can't read Cisco. Yeah, 0.5 out of Cisco. He's practicing his paper trade, which would have been an additional 3. And then on Rivian, 0.7 gain of actual. So good work, staying with it. When your trade with skin in the game is over and you want to stay with it to keep working on patterns, that's the best way to do that, because you already have an emotional connection, and it will make that exercise memorable for you. Quick look at the reports. We'll start with excuse me. Dashboard number 1. Still bearish normal. Today was a weekday. Starting to see real weakness on the short term 10 and the 30, and that's progressing to the longer frame if this continues. Risk Z is warning us, risk off. Merck and Procter still among the min pains. Tesla and Intel and Alcoa just getting crushed. There was never an easier target than those two right now. Tesla just standing out like a sore thumb, off 8% today. 4.9 on a retest of the 10-day high. Plenty of auto framers to choose from. Tesla is a 5DD, so it's an auto short. Weakness in Intel today. All the semis were down. In the ETFs, weakness here in clean energy and tech. Clean energy's just been an auto short. It's like clubbing a baby seal. And weakness in discretionary. That comes from Tesla's the largest component of that ETF. Meanwhile, Brazil and Latin America quietly making some minor gains. We're going to go right to the snipers. There's one enraged Godzilla right now, Tesla. If you're not exploiting that, I don't know what to say. There's Amazon, Apple, Micron, PayPal, Salesforce, Western Digital. There's some real significant names just getting slaughtered right now by Godzilla. As you know, the big movers, I like looking at those. These are all the ones that were bigger than 2 sigma on the size of their daily move. KMX is also up there for me now. Double green. Tesla and KMX among the most volatile. And I think that's everything for the day. We'll take just a quick run through of the NDX. U.S. Steel, Cliff, Merck. Yep. And Brazil showing some signs of life with Mexico there. That looks like a tactical rebalancing to me. I mean, I wouldn't bet the farm on that, but that's certainly tradable. Mexico and Brazil are both frog champions for intraday trading. All right, that's everything we got for today. We'll get this published and posted, and take good care.